Educational purposes only. The stream, I'm not here to provide financial advice, and everything that I say is my own opinion. And I'm on a sim account at the moment, so please do not follow my trades. I am trying to figure out how to be on live, answer questions, talk, do commentary, be entertaining, and trade all at the same time. So I'm doing all of that, but live trading. And once I'm consistent in the live trading with all of that, I'll add on to going live once again in a live account. So welcome back, everyone. This isn't really about trading. Trading just happens to be the court I've chosen to step onto. What this is really about is intention, not purpose. Purpose asks, what am I supposed to do with the rest of my life? That's a question most of us can't answer. And intention is much simpler. What do I want to participate in today? What experience do I want to create right now? And once I know that, I can begin aligning my actions to that intention. If I enjoy the process, I keep showing up. If I don't, I choose a different intention and begin aligning my actions to that instead. That's what you're watching on this stream. You're not watching someone trying to trade perfectly. You're not watching someone, you're watching someone practice aligning his actions to his intentions in real time. You'll see me struggle. You'll see me lose focus. You'll see me return. Because life isn't about being perfect. It's about becoming a little more aligned than we were yesterday. And every time we align our actions with what we genuinely intend to experience, something changes. We experience fulfillment. And where there is fulfillment, there's usually a little more joy. So whatever your core is today, let's step on it together. Let's align our actions with our intentions. Let's move toward a little more joy. And let's get started. Okay. Let's see here. Let me get my other little area up here that's behind the curtains. It's not really, but it sounds good. All right, sorry about that. I am talking to individuals in Discord. We have all sorts of stuff going on right now. Okay, it is now 8:45 and the opening range is now in session. It's here. But look at how tight this is comparatively to most days. Okay? I have unfair lows beneath me. Oh, well, shoot. My plan's gone. I had a plan up here. PMA before the market opened, and I had to restart my charts, and I must not have saved it. Okay, that's all right. Let's do this real quick. This is what we have Discord for, and this is why it's saved. If you want to see the PMA before the market opens or anything along those lines, come on in and join the social for Discord, and we will get you in and you'll be able to see the information as it's happening, as I build these plans and provide them to the community. So if you are interested in that, please join the Discord. Let me get this up and operational. There it is. Yes, this is it. So this is the plan for the morning session. And I provided an updated plan too with another area, but this area isn't for the faint of heart. This area is for individuals that know how to trade reversals and are prepared to trade reversals. And so this is what that plan looks like this morning, and where we're looking for possible intention in the market, or movement in the market. And I believe I shut down my chart that I need. So let me open this back up again real quick. I'm all kinds of disorganized this morning. I do apologize. Okay, so let's go ahead and open up a different one. Let's open one that you guys haven't seen before, and then we'll open up this other one again. And hopefully my chart's there. And price action still trading in our nice little range right now, so I'm not too worried about possibly missing anything right now. We do have buyers stacking up at the high and sellers coming in a little bit more aggressively off of the low. Now let's go ahead and get our other one back up. And yes, I am working on the ES. So there's and I lost my chart. Okay. We need to create a new one. So let's go ahead and I didn't create a template for it either. Well, this isn't good. I can't believe I closed that. All right. Well, we will go ahead and work on that at a later time. Maybe I have it over in one other section. Hold on. Just one quick section. One quick second for me, please. I am batting 1,000 right now. All right, there's my 30-minute. And let's see if I can save as. Save new. Now we'll go back over to the other charts. Now I want, oh, you know why? I know. It's what happens when you're still new to a platform. It takes you a second to get something done, but that's okay because we will get it done. And then I should have local 30-minute, and there it is. Perfect. That was easy enough. Much easier than I made it. I apologize if anybody's talking in chat. I was trying to get everything up. Z06, welcome. Yes, yeah, I'm back on the charts. Sorry about that. I closed my longer time frame here and completely messed it all up. So I had to start everything back over again. And now I got to figure out my area of can I get all of it on here? Yes, because now I need to get my profile built. And I'm going to go ahead and grab my profile from here. It may not be the exact spot that I had before, but it's going to be a very, very similar. And now we're going to take this and we're going to go into properties. First thing I want is that line color off. And then the second thing I want is to make it extended because we want all of the information wrapped up in. Now let me just go ahead and build a couple of areas out here of interest. And then we're going to get started on our trading day. Looks like price action is trying to pick up some sellers to the downside. Let's see if they continue. There's that. There's this. I did not plan on having to do my PMA during the live. So again, do apologize. Okay, let's not close that chart again. Let's keep it up and we'll be good to go. All right, so our next thing that we want to do is we want to come in here on our profiles over here. I want to go ahead and merge a few more of these as we're going through this process. We're still in and I need at least one more. There we go. All right. So we're going to take our static area here. We're going to take this area right here. We're going to be looking for a potential breakout of this area to possibly go short. Continuation play to a short here. Sundaram, how are you? Doing great, thank you. Sorry, trying to get my PMA. I deleted a chart this morning on accident and trying to get everything up as I am going live, which is always a good time, right? This is what happens when you're new to streaming and you make a mistake. Sometimes things just don't go to plan and we have to adapt and overcome. The good thing is I'm not stressed out. I'm not worried about it. I'm going through. I haven't missed anything on the charts and here we go. We're ready to go. So this is actually good golf. There was a point in time where something like that would have happened and I would have absolutely freaked. So yeah, growing. Even at 50 and gray hair, we can still grow, right? Good morning, Dino. Hope you are having a good morning. Welcome to the stream. Okay, so what do we have going on for the day? What we're looking for here is initial balance, which is pretty narrow comparatively to other days. It's especially unique because we did have a 5% increase in the VIX last night, and we're a little bit above 20, showing high volatility. And of course, the US sessions opened up and said, hey, you know what, we're not going to listen to you, VIX, and we're going to open up in a little bit lower volatility. And what does that mean? A possible consolidation day is possible due to the lack of volatility moving from the Asian London session to the US session. And if you remember yesterday, at the end of the US session, we were pretty volatile. At the beginning of the US session, we were pretty volatile. So this could be one of those consolidation days where we just kind of stay a little bit in a tight range. It's like a coiling spring waiting to break out. All right, we're still balanced in daily charts. We're not showing any portions of trends or anything like that showing up. We are looking long in our unfair lows, and we are looking long or short or long in our looking short in unfair highs and looking long in our unfair lows. But of course, those areas break out. We're going to be looking for potential trends. Remember, on breakouts, we have a market shift. Market shifts are the most difficult things to trade because we're not in balance, we're not in a trend, we're someplace in the middle, and we have to wait for price action to develop a little bit before we can really say, okay, we're in a trend or we're in a false breakout. All right, that's going to move back to balance. And so those phases can be a little bit tricky to trade. If you don't trade well or you're just learning auction market theory, be careful of those. And of course, if you are in a situation where you are well versed in trading, you can absolutely have a plan and trade around those shifts. A breakout here is one of those shifts that I am talking about, but we are coming off of unfair lows of developing value, and we are below VPOC and coming off of value area low off of higher time frame volume profiles. I don't think you guys can see that chart, so let me bring up the chart that I'm indexing right here, and you can see the areas of what I'm talking about. Coming off of unfair lows, right? We have VPOC up here coming off of unfair lows here. So with this breakout, we can get a pullback. Our pullback is expected to the area of where the auction is taking place within current footprints. These are the high volume areas. I'm not just pointing to dots here. If you look at the chart, we have 152 comparatively to 125. We got a lot of sellers participating in this area. We have a lot of buyers participating in the area, and all the dots are doing is just make it visually appealing to see where those auctions are taking place. If you have questions on any of this, you can go over to YouTube and check out the live demonstration that I did last night that talks about all of this. It was a live session talking about demonstration in the title, and you find that video. You're going to be able to get all of the answers. I just went through a trading day last night with an individual and taught them everything that you could possibly learn in terms of auction market theory, how to create profiles, how to read them, how to trade them, and how to read and trade footprints. It's all in there. So if you're interested, there it is. It's about a 5-hour video. So take your time with it, spend some time. If you have questions, come on to Discord and let me know. You can ask questions here as well. And I will be getting to those. What I'm looking for here is a possible continuation. We got our pullback that we were anticipating into our auction area of our footprints, closing above initial balance, moving into a possible imbalance condition through balance. What do I mean? Okay, a lot of information there. What we have here is price action came down and rejected from these lows. Okay, price action hasn't been able to get back down to these lows. We have low volume here in our current profile. We're in a low volume area from yesterday's profile. Okay, price action has now closed in a potential breakout of current initial balance on the possible breakout of initial balance on today's U.S. session. All right. And in the context of that breakout of the US session, what we're expecting is a possible trend continuation to the upside. Trading imbalance on the longer term, yes, but looking for an imbalanced market condition to the upside, which we would see what? Possible momentum. We just saw momentum break out to the initial balance. I got stopped out on the first position. Now I'm in the second doing exactly the same thing for the same reason. All right. We were down $20 so far on the day because I did have a few trades before the market opened this morning. And now we're turning around and locking in a potential of locking in $530 in potential profit here. We're up $1,400 in the position. We do have volatility. I'm trying to give this some space and room. We don't have a lot of areas to index here above us. Price action starts to move back down pretty swiftly. I will be looking at moving my stop, but right now I want to give this some room and lock in about $530 so far in potential profits in this current position. And that's what we're doing at the moment. We do have an auction up here, so I'm looking for possible retracement between these two areas. If we break this area, I'm looking for a possibility of a breakdown. That's when I'm going to start getting a little bit more aggressive in my stop in case we do get stopped out, and I do have a re-entry now because we do have an auction above us. But this is a possible area of rejection here. We do want to give the market a little bit of room. If this does break higher, I would anticipate this area to hold as a level of support. I would move my stop down there on the pullback because now I have volume telling me that I have areas of room now, and I'm not just guessing where I'm putting my trailing stop. Any questions about anything that I just talked about? Any questions about my plan? I know I was a little hectic this morning because I had deleted my plan that I had made earlier. Price action came back down through the area of support. I'm stopped out 1140 on the day so far. We do have an auction above us. I really don't want to go short right now. I don't want to go short because we are in an area of value at the moment where we're expecting range type trading. Okay. So we're talking about looking for potential retracements and little areas of consolidation as we're trading within that range. But overall, we're coming off of unfair lows. We're expecting a continuation to the upside. Initial balance in the US session broke to the upside. I'm pretty much biased to the upside right now because of what current price is doing. If we come back into this area, I will be looking for a potential long position. We have sellers in here. If price action starts to move higher, we could possibly have trapped sellers, which could create a possible stop run and more momentum coming in as we start breaking highs. And ladies and gentlemen, this is trading. Price action starting to break through here. What do we have up here? We do have a seller. Sellers defended the price they once came in aggressive with. That's all that's happening right now. All right. Doesn't mean that we're going short. Doesn't mean we're going down. It doesn't mean we want to be short. It means price action came back and tested where sellers once were. Just like we came down and we found sellers down here. Now we're testing where sellers are. What should we anticipate? To test again to see if buyers are willing to buy again down here where they were before. If not, we're going to test sellers. Okay. It's the auction. All we're doing is just auctioning right now between higher volume areas. It's no different than trading around a VPOC, volume point in control, and trading around a higher volume area. Same concept, different time frame. That's the only thing that changes there is time frame. The concept is still the same. But instead of seeing one line for VPOC, you're seeing the high volume area within the short-term chart. Where am I looking for a long? Well, we need to get buyers aggressively engaged above where sellers came in, which is right here. If I can start seeing price action move above this area, I can look for another long, have a pretty decent stop, not very much risk in the position, and hold this as an area, as a ledge of possible strength, and buyers resuming, if it comes back down and tests, buyers resuming to the upside and getting aggressive as we start breaking highs once again. Any questions to that information? Here it is, a $630 risk. We're now up 200. This is a scalp position. We broke that high there. Price action moved too quickly for me to actually move my stop to a break even once we had revenue of 200. So I'm going to go ahead and maintain the position, right? Because I would be re-entering here now if I would have gotten stopped out. And why am I re-entering, and why am I getting stopped out? For the money management purpose. If this thing goes $200 in my favor and comes back, there's a chance we could snap through this area. If we don't snap through this area, I can always get back in. And if we snap through the area, I don't want to be long again. Now we're up a little bit over 300. I'm locking in 105. Again, just waiting for the momentum to come into the market. And if it doesn't, price action is going to pull back. I'm stopped back out. We're up 300. I picked up 105 in the scalp. And now I'm waiting for the next position. I'm just hunting for that next position. That's all that's going on here. All right. Nothing crazy, nothing major, just waiting for price action. What do we have again? Another seller here. Since we do have a seller above us and we have possible rejection up here, I want to give this market a little bit of time. It could continue up and it could break the highs. It can go without me, absolutely. But we can also reject below these highs and come swiftly back down again. And I really don't want to take the risk in this type of market condition. Highs broke, okay, fine. But I want to give this market time because of the volatility that we were in. We're up 1245 right now. I don't really want to take a possible risk on this position. Now we have buyers stepping in. I'm going to go ahead and step in here now on the long side, looking for another scalp. Sellers came back in here. I want to give this room now because now we're looking for a possible cycling. If price action comes back down into this area, starts seeing buyers, I'll add another one and reduce my entry price so I have a better price and a better fill, dollar cost averaging myself into the market. Why do I want to do that? Because price action is showing a possible auction up here, and I want to be long if I can be, but price action with the auction is probably going to come back and test where sellers were once strong. They're testing the auction. That's all they're doing is testing the auction. If this market's really strong, we're going to see these areas hold with buyers, and we're going to get past the area where the sellers are in. And if we do, I'm going to dollar cost myself average into the position itself and see if we can't go up here and break highs. But now instead of my entry being at the highs, it's a little bit of a better entry. By the time we get to the highs, I can already do a locked in break-even trade in case we reject from the highs again. That's all I'm doing is just dollar cost averaging myself into the position. I'm acting as an asset manager instead of a trader when it comes to risk management. Traders use stops as risk management. Asset managers use entries, use contracts. They use inventory and room to manage their positions, not stops. That's the difference between a trader and an asset manager that's longer term and using a profile or managing a profile or portfolio is what I mean, is managing a portfolio. I'm going to be going through that today at 2 p.m. and showing how we can use inventory for our trading and not actually have to use stops. And if you tune in, I'm going to give you an opportunity that you can use in terms of having an evaluation that's going to allow you to do that. So you no longer have to rely on your stops as a trader. You can utilize position entry and inventory to give you room, so you're not always constantly worried about your stops and going for a 1-to-1 or 2-to-1 risk reward ratio. That's going to be here today at 2 p.m. Eastern Standard Time, going through these same principles I'm doing right now, but instead of managing your position with a stop, you're managing your position with just straight inventory and room. What is room? The black space within a chart where price hasn't been trading, or an area and a gap where price traded where you tried to enter but price went against you. That's the room, and we're going to learn how to decrease that room so it doesn't take as much to get back to it if necessary. Questions, comments, concerns? Still hunting positions. I'm still only looking for the long side. I'm not getting I'm not getting in at this auction right now because I'm seeing buyers getting aggressive in here right above this high, but price action is not increasing higher and buyers are actually leaving the market. So I'm not seeing momentum at this high. We've already pulled back a little bit on the high. You can see delta volume is actually decreasing right now at these highs. I want to wait for a pullback and a better price. Where am I expecting pullback to go or be? I am expecting pullback to come possibly into these areas here. We can get pullback a little bit above these areas. And if I don't get the pullback, where am I looking for a potential long? A long will actually happen again someplace up in this area, and we're going to get in on momentum. And we want to see a buyer like this at some high without a seller. And we're going to get in above that high, anticipating momentum to come back in. But if we get our pullback, we'll go ahead and go long from lower prices so we can get in at better prices and have a higher possibility of profits and further profits from a running position instead of just a small scalp that stops us out like the last long just did. Again, questions, comments, concerns, let me know. We have a nice deep down bar here. We just touched an area. I'm not talking about entering areas here. A test of this area is not just a down bar. We're not trying to catch a falling knife here. What I want to see is after this bar closes, how the next bar develops and how it develops around this low, how it develops in the context of buyers and sellers around this low. I want to determine rejection from this area, and a wick is not rejection. We need order flow, and we need time, and we need another bar, and we need another price in order to be able to determine those things. We're not trading areas. We are trading actual volume within the bars, matching the volume we're looking at from higher time frame charts. What do we have now? An auction. See what happens when you wait, you get more information. So what am I anticipating now? A possible rotation on the next bar between these two. If so, we're going to test the low. I'm going to be able to look at the information of volume here at this low. It's going to give me a nice determination of what I should be expecting. We are getting buyers above this high right here, above the buyers, right? but we have the sellers here. So I'm anticipating price action to come back and test and see if we actually have sellers coming into this market. If not, the buyers are going to be defending this area. We should be seeing higher volume. We have buyers now above us stepping in as well. We got price action above that. Very little selling here on the lows comparatively to this volume of sells. What do we have? Hundreds over here. We have just a few tens over here. What are we expecting? Price action to go back up because sellers are not coming in at the lows. If sellers were willing to sell up here, don't you think they'd be willing to sell at lower prices as well? If sellers are leaving the market, it means that sellers probably will not be the ones that are aggressive in price. If sellers aren't aggressive in price, then somebody's going to be aggressive in price, and the only other option is buyers. This is the other area we'd be looking for along right now, because now we're getting above the buyers again with momentum as we're coming through, and now you can start moving your stops here around this high if we break these highs. Questions, comments, concerns? I'm not trading areas here, guys. This is absolute trading. This is trading through order flow. This is trading through auction market theory. This is not a place where you're going to say, okay, look, here's a fib area. Here's a area of support and resistance. My support and resistance is coming directly from volume. I'm not using lines. I'm not using anything else. All right. You only add a position where you're sure the price might have momentum on your direction and scaling to lose less when it gets to your first position. Correct. As a rule of thumb, yes, but price action is not always the same, because once you enter the position, you're going to get new information, and you need to update what you're doing based on that new information as it's coming into you. But as a rule of thumb, 100% seed, yes. Price action now, where are the sellers at here? If price action is strong, we should see buyers reacting from this area. So we should see some rejection from here. This is why my stop is so low, even though I was up, so quite a bit more than where I'm going to be taking a stop at if buyers don't come into the market. Why am I doing this? Because we are moving into the direction of a higher time frame. I want to give it room so the short time frame doesn't just stop me out and I don't lose my position. If we get stopped out here, we can cycle back in to other areas where I can still get into another long position and still have possibilities of moving into profit. But if I lose this position, I may not get an entry up here, and now the market goes without me. That's why I'm giving this so much room on a stop. On a scalp, because you got to think about it. If you're a trader, right? A trader can trade multiple time frames. If you started as a scalp, you turn your scalp into a day trade, and a day trade into a swing trade, and a swing trade into a position trade. And if you can think of trading in that aspect, then you have entries, and you have exits, and you have allocation for inventory all over the place based upon your methodology of scalping, day trading, swing, and position. And what I just did was took a scalp and turned it into a day trade. That's all I'm doing right now. And that's why I'm giving it more room, because a scalp, I would want to be out with profits, right? I don't want to be out with profits because I want to give this market room, because I'm expecting it to move into a higher direction now off of into a day trade based upon the information the market is giving me. Where am I looking at a possible high at? 29,700. And if price action doesn't come back here and get me out, it's not putting me in an area where I can get back in, because I don't have an area to get in up here right now. If I did, I'd be moving my stop. This keeps me from having to overtrade in areas of consolidation. So you don't get all kinds of wrecked and messed up in what people call chop, and what's actually just rotational balanced trading. If price action breaks the highs, I'm ready to move my stop. We're up 920, up 800, 920, 935, about ready to break the high over here. Let's see if we get the momentum breaking into the high. Not yet. Still an equal high. Not quite the high that I wanted. So we're still in a period of balance up here. I am going to wait and not move my stop and risk only bringing in $170 instead of, $700 that I could have if I was able to move my stop. I am stopped out, and now I can hunt for new positions because now I'm anticipating a rotation down here into this area, a rotation into this area. Buyers are strong in here. I have areas down through here all over the place that I can enter if price action is attractive. I don't see anything attractive at the moment. I'm staying out. Up 1490 on the day. And that's just where we're at. What do we have? 3 trades, 1 expense, 2 revenue. Let's go. We still have our auction down here. What do we anticipate price action to possibly reject at right now and rotate back down to test right up here where these sellers are? We can go off of past data, but we want to utilize the most recent data because just like any market, right, it can move sometimes on data that's already priced into the market. These could already be priced in based upon this movement. All these players could be already making decisions even in this area. We don't know. We want to use more recent data than past data, but this auction down here is rather important, so I'm keeping this area. And what's an auction? Where buyers and sellers are communicating together at near prices. Any questions, comments, concerns? Am I confusing everybody, or are people starting to pick up a little bit of what I'm throwing down? There's your rejection. Right there where we would expect him to. Where's your buying support, your most recent? Right here. Price action, where's your current sellers? Right here. Sellers, we could see price action trade through here if we get back here. Buyers are stepping in and defending. I'm going to go ahead and take a position. I'm going to put my stop right below here where the sellers are and only risk $615 on the overall position. If you're doing an asset management type trading, you don't even have a stop in here. You don't even have a stop. Why? Because you know that price action can turn around and trade anywhere back into these areas. And you don't care if price actually goes against you because you're going to use inventory to get yourself back into the market and to bring your price down instead of relying on stops. This is why most retail traders lose, because they rely on stops. Because if I would have kept my stop there, I've been stopped out, and the most of them don't have a re-entry. I have a re-entry right in this area, but I deleted my stop, so I didn't get stopped. And then there's the re-entry. And if you're doing asset management, you would definitely be re-entering in that area. You're picking up, Seed? Good. That right there was just an audible. Me deleting my stop where I did was just an audible, anticipating price action to possibly break this area by a little bit. And here's the momentum we were looking for, guys. Look, this is the momentum, ladies and gentlemen. We're up 2,000. I'm locking in 1,200. I'm locking in 1,425. Price action's getting a hard time going through here. I'm moving my stop a little bit more. Did I move it below where the sellers were? Yes, but we didn't see buying pressure come in here at all. So I didn't want to be in the market, and we just locked in I don't know what, and we're up $3,040 on the day, trading at 75% accuracy. 4 trades, 1 expense. Let's go. What more do we want? And how difficult is trading? And the question to ask yourself right now is, how much is enough? How much do you really want or need to make in a day? Because we can continue going, but we don't have to. Because all it is just the amount of time that you're going to spend behind the charts to get the goal that you're looking for. Exactly, Seed. This is hunting. Remember yesterday when I was going through this and we were down to 5,500? That's because price action just kept cycling through the same areas again and wasn't breaking out with momentum. But you see what happens when you actually get momentum? Volatility was too high yesterday for this methodology. 200,000 exactly. Yes. Or 2,000 only. Exactly. In this case, 3,000. That's it. That's all this is. And one of those days you're going to pick up that momentum. And even yesterday I was down $5,500 at one point in time and still brought it where I was positive 248. Did I make the 2,500 goal that I have in mind? No, but today I made 3,000. So that's 700 one day and $2,500 the next day. Am I going to bed crying at night? No, definitely not. And I did it on a day where I'm a little bit shaky because of the rough start and the shaky start that I had this morning. My chart here isn't the same of what I created from my PMA, right? I'm a bit nervous right now, but I'm still on the court. Conscious participation is on the court right now because if my subconscious processes would have come on the court, I would have had expense trade after expense trade today because it's not good at trading at all. So even though the stress was there and even though I'm making a fool of myself for making all kinds of mistakes at the live edge in front of you all and an audience, I'm still able to maintain conscious presence enough to allow myself to take action towards conscious intention, allowing myself to achieve my goals. And that's the Human Performance Lab. That's what the Human Performance Lab is all about. Trading is just a demonstration of that process. And I demonstrated that process this morning, aligned to my goals. Trading at the live edge was already stressful for most people. Doing it in front of others, talking, commentary, putting myself out there, and still able to maintain conscious participation in my actions. Not going back and relying on habitual patterns that don't serve my goals, my personal conscious participatory goals. My logos are off this morning. Let me fix those a little bit. Any questions? Any comments? Any concerns? Yeah, what's your question, Seed? What's up? There it is. I knew I'd get it figured out at some point in time. There. So now we have rejection at the high, right? And we're coming back down to where buyers were down here, right? Which is support, but look at all the resistance above us. All the resistance. Look at all the high selling, the high volume selling up here. And we're being attracted to it like a magnet. But what we're probably going to get is rejection from it. When we get rejection here in this area, we don't have momentum. The probability of momentum decreases, and I don't want to be in now. Or staying into this position and getting back in down here, we have all kinds of room for momentum. Why? Because we're turning around and buyers are supporting this area. We can get a possible stop run. That was less than 15 minutes of trading, 100%. Less than 15 minutes of trading, $3,040, only trading one contract at a time. Thank you for noticing that. I appreciate it. I wasn't going to call it out myself. That would be a little arrogant. Not arrogant because I would think it was arrogant, but I could definitely see where the audience could think that that's a little bit of arrogance. But yes, 100%. Less than 15 minutes of trading, $3,040, trading one contract It doesn't take size to do this. You have to understand the auction, because that's all a market is an auction. And if you don't understand the auction, what are you doing? It's like trying to swim when you don't understand water. What's the difference? Trying to drive on a freeway when you don't know how to drive? On a low volume area and you're expecting price to reverse. So what you're saying is I'm not on a low volume area and I'm expecting price to reverse. Is that what you're saying? I'm not expecting price to reverse. No. What I'm expecting is rotation. Why? Because we're trading in value. But not only are we trading in value, what's happening in the current developing value area? We are just above value area high and a low volume node of value area high of developing profile. Okay? Then where are we at? Above that, in unfair lows of yesterday's profile, right below value area lows, which means we could see rejection in this area right here. There's a possibility of rejection in this area. Let me make this red so everybody can see it and we can understand this concept, right? This is what happens when portfolios lap over one another, and we really have to understand this concept, okay? So from 29,700, okay, down to about 630, 633, and where are we right now? Right around 630, 633s. We have this area here which could possibly act as rejection. All right. And so we're looking for possible value balance trading within that area. And unless we break out of the 29,700 range, right, then we can see rejection within this area. Can you scalp these areas? Most definitely. Do I want to go short? No, because we're in an overall long-term trend right now, right? We are rejecting unfair lows. We're moving back up and to the other side of value, but we do have an area here where we can see a potential area of rejection. And the question is, do we want to take the risk when we have overlapping profiles, or do we want to take positions before the overlapping profile so we can get out with potential profits before the rotation starts? And as a trader, you have to make that decision for yourself. Nobody else can. I just choose not to participate in this area because I know what overlapping developed and I know what overlapping dynamic and static profiles and areas can do from experience. I've been doing this now for off and on 30 years, 33 years. Did it professionally for 12 years straight before I retired. And then I just unretired a few months ago, in April, in fact. And the beautiful thing is I've already grown as a trader substantially after that break, because there wasn't very many times where in less than 15 minutes I could bring in $33,040 per lot, per contract. Very, very few times. I could when I was trading 18 lots in the Russell and 25 in the ES, but that's a different story. Different story for another day. Any questions? Any comments? Any concerns? Anybody interested? Anybody out there that saw this today and they're interested in learning more about this? Say hi in the chat. Just say hi. Just tell me hi. I'll see you. Seed, I think you might be the only person in here today. Gotta love new channels and new people. Takes some time. And if you want to see, I'll show you what I'm talking about here without all the lines, so it might be easier to see. See that area I'm talking about? Yesterday's unfair lows, today's unfair highs. This little area right here for me, that area right there in between is a dead zone for my trading. And honestly, I didn't see it. Hi. And honestly, I didn't see it until after it was already developing, because I was still hunting for positions in here, and I realized that I was too focused on the short-term chart. So I went over to my long-term chart, right? Because I've already made that mistake before, knowing that my program can do that. And I was kind of already coming off of the court, right? Because I was too focused on the short-term charts. I looked over my long-term charts and I'm like, wait, I have overlapping developing value areas here telling me two different things. That's my key to stop. There's 3 more people watching. Beautiful. I don't have my numbers up. I try really not to pay attention to numbers because it's another way that I can trigger my orientation, my thought process back over to my habits. So I try to limit the triggers that I have as much as possible. Thank you for letting me know that other people are watching. But yeah, no, I have no idea. I try not to do that to myself. I don't need to add more pressure to myself right now when I'm trying to figure out how to do all of this at the live edge. That's why I'm on sim right now and I'm not trading live. Now the sim trading, right? People will say, "Oh, well, you're sim trading. It's not real." It's the same exact thing. What makes sim trading not real is when you start doing asset management stuff. You start getting into positions where you're in 10, 12, 15, 20 contracts at a time just to try to get yourself back up to break even again. That's where sim trading breaks apart. Sim trade until you're comfortable, because if you're nervous sim trading, you are going to be even more nervous live trading. Please don't do that to yourself. Please don't. People that say sim trading isn't proper, they don't know what they're talking about that in that regard. Sim trading is there for you to get the confidence. Now, if you're doing things and you're breaking your rules and on sim, you're going to do the same thing live. Don't do it until you have 20 to 30 trades. Why 20 or 30? That's statistically relevant. Do not trade live until you have 20 to 30 trades aligned to your trading plan. Aligned to your trading plan, not results. If you have goals and you have an expectancy, you have a win percentage you want, beautiful. Add those objectives in. But over 20 to 30 trades it's going to take for you to adjust your trading plan based upon your numbers of your objectives. And if you do it before then, you're making changes to your plan before it's statistically relevant to make changes to your plan. This is why a lot of individuals fail at trading. The reason why individuals they fail at trading is because they're too result orientated sometimes, and they start making changes to their plan and they don't stick with anything long enough to make the numbers work out for them. And you better be doing at least 30 trades in your sim account aligned to the rules of your trading plan before you go live, just so you can get the experience of multiple different types of days. And if you're an active trader, you probably want to get closer than that, because you really want to have a good 20 days of trading before you go live, so you can see your methodology in different time frames and different periods of volatility, so you know what to expect when you're live, and you're not guessing and thinking when you're live of what can happen, because you're not used to seeing price behave around your patterns. I hope everybody understands that as well. Confidence is directly linked to clarity, and clarity is directly linked to confidence. They go together hand in hand. Marry them, bring them together, make them a couple, and you'll be glad you did. And what have we had since I stopped trading, since we've been in this area? Consolidation, price action moving opposite to our overall plan on the long side. stayed out of trouble. We didn't give back any of our profits. And my hour of trading at night at the US Open is up. Any last questions, comments, or concerns before I go? And I'll be back here at 2 a.m. Sundaram, you still going to be here? Or 2 p.m., sorry. It's 2 p.m. New York time. Sundaram, you still going to be here? We're going to go over that information. Teach you how to trade like an asset manager or teach you how to enter around areas through inventory and room rather than an entry and a stop. And I'm also going to go into the concept that most prop firms are fully designed to get you to trade directly off of stops, which is how you churn accounts in the first place. Churning accounts keeps you paying for evaluations. And I have found a place that you don't have to do that with. But if you want that information, you got to join me today at 2 p.m. and we'll go through that information. Seed, you're satisfied overall? Sweet. Well, thank you. Thank you, sir. I appreciate you and your time and all of your support. You are extremely much appreciated, my friend. And I was on the live charts and price actions going down, and we broke through the protection area, which is basically just one standard deviation away from initial balance high. And it starts calculating after the first initial breakdown. And we have a rejection and moving back down into possible initial balance high. And then that would be a whole new range of purposes for trading around, where today it was the breakout and expectation of an imbalance condition on a short-term chart to move into the direction of LTF value, long time frame value. We got to the area of overlapping areas. We rejected from that area, and now we're trading back down again. Why didn't I want to go short up there? Because we also had an area there developing that told us to take long positions in an LVN, a low volume node. So you're not expecting price action to stay there very long, and that's about the exact area that we rejected in. And price action didn't spend all that much time there, and it rejected, and now it's coming down. But it could have done that same thing, but on the upside. Just didn't want to trade in the area. Amar, thank you so much for putting that in there. I appreciate you. If you guys have questions, come on over to Discord, or put a comment in the video. I answer all the comments. If you like this video, please hit that like button. If you found value in this video, please subscribe so you don't miss other future content. It really does help small channels like me in order to be able to grow and increase our sphere of influence. Trade only Forex market a couple of years ago. Now this future market, I am just exploring your methodology. Yes, auctions. It's all auctions, but you need volume. So Forex futures, yes. Forex, you'd have to go for pairs, currency pairs. You can't use volume, so you go to ticks. And so instead of doing ticks, you have to instead of doing volume, you have to do ticks. All right. So you're actually analyzing tick data and the amount of ticks in a bar comparatively to volume, because there is no volume in the currency pairs, but there is volume in the Forex market for individual currencies, like the Australian dollar and those type of things that's traded on the CME. So yeah, deep charts, you actually have to purchase that seed. You have to go to deep charts and you actually have to buy the charts, the system, the program. There we go. That's what I'm looking for. Bog, hey, how you doing? Yes, absolutely. It's good to see you too. I hope you have an amazing day as well. Enjoy. What did you think about the live session today? Give me a little critique from your professional experience, if you don't mind, please, and thank you before you go. Where did the pullback go to right now? 24.55. Let's take a look. Where did the pullback go? So the pullback actually, and the numbers. So this is one of the reasons why I'm not trading right now either. See, when I deleted this, I don't have my PMA anymore. And I drew my profile from a different spot than I did previously, just trying to do it real quick. But we came off of this low volume node here in value. Okay. No, Amar, the bot doesn't seem to be working. That's okay. You'll get it figured out. I have trust in you. And so that's where we're coming off of in price right now, is that area. What is it? 29,455. It's actually, no, it's not. Hold on. 24,555. Right there. So we're coming off of this area, actually high volume, and high volume acts as a magnet too. But when high volume acts as a magnet, expect rotation because price actions traded there before over time. Yes, I'll be back on live at 2 p.m. Eastern for you, Sidarum. So hopefully you're there. And so now you should be, with this pullback, you should be expecting rotation here instead of rejection. This is why I do low volume nodes instead of high volume nodes. High volume nodes are going to act as a magnet, right? And when price gets there, expect rotation around that area. When price action goes to LVNs, especially in low volume nodes, especially in the unfair lows and highs of current value, you expect rejection because price didn't trade there for very long. If there's not rejection, it's going to trade through there pretty quickly. Don't expect too much rotation. So if you start to see rotation in LVN and unfair highs or lows, start looking for rejection or continuation to the other side, because it's either going to continue to move in direction, which is a short-term trend, or it's going to reject from that area and move back into what? A high volume area, which would be back into value. The live session is as knowledgeable before. Love them. Keep up the great work. Kudos to you for teaching this and sharing your experience and knowledge. Love for me. Bach, thank you so much. We will be in touch here really soon. I promise. And Amar, you keep playing with that. It'll happen. We got this. We have options too. All right. Thank you, everybody. I really appreciate you for being here. I appreciate the comments. I appreciate the conversations. I appreciate the feedback. Just you here, knowing that you're willing to spend your precious time, the most valuable commodity you have, watching me live, is thank you enough. And I really cannot say enough how much I appreciate you and the time that you spend watching my work. Thank you very much, everybody. Truly appreciate you. Hope you all have a great day and enjoy. Happy trading and good hunting.